Hello and welcome to Economic News. For more on economics and finance, go to www.myfinancesteacher.org. Today is 21st of November 2016. We are going to discuss government debt from a long-term perspective and the potential future financial crisis. Over the last decade, government debt in many countries has grown considerably. Let's look at the ratio of government debt to GDP, as reported by tradingeconomics.com. GDP is basically the country's annual income. So a ratio of, say, 50% means that the whole country would have to work for free for 6 months if it were to repay the full debt as soon as possible. This chart shows the US government debt over the last 2 decades. The US government debt is around 105% of GDP, and it has grown from under 70% a decade ago. This is a really large debt. Even all of the annual income of the whole country is not enough to repay the debt immediately. The Japanese government debt is around 230% of GDP, and it has more than doubled over the last 2 decades. Japan is currently the largest debtor in the world. The Taiwanese government debt is around 32% of GDP. Although it's much smaller than that of the US or Japan, it also has more than doubled over the last 2 decades. Now compare these numbers with the government debt in Greece, which has already experienced a debt crisis. The Greek government debt is just under 180% of GDP. Notice that the Japanese debt has already surpassed the Greek one. This might mean that the next big crisis is soon, and it might hit in Japan. Besides, the Japanese economy is much larger than the Greek one, so the ripples of a possible Japanese debt crisis are going to hit all over the world. If Japan defaults on its debts, bonds and stock markets around the globe are going to lose a lot of value. How can you protect your investments from the upcoming crisis? You need to have a share of your investments in hard assets, such as gold, silver, productive real estate property, and Bitcoin. These are the assets that are somewhat independent of the banking system, which will be hit by the future crisis. An additional reason for these assets to appreciate is that the growth of the government debt is accompanied by the central banks printing lots of money. This is because when the central bank wants to inject newly printed money into the economy, it uses the money to buy government debt, government bonds. Hence, the debt and money printing generally go together. Greater amount of money in circulation will create inflation and further increase the prices of hard assets mentioned above, while lots of purely financial assets are going to lose value. The question is, when will the next financial crisis hit? Nobody can know for sure. It can happen next year or in a few years. In either case, you need to be prepared. Once the crisis starts, it will be impossible to obtain hard assets at reasonable prices and avoid having losses on the financial assets.